Hey everyone, Blair Ballin here with this week's weekly real estate market update. Hopefully you're doing well and staying safe out there. As always, using the Cronford Report, if you're interested in receiving this for an area you're looking in or where your home is, feel free to reach out and I'll send it specific to your area. So, let's get right into it. Active listings this morning, homes on the market without a contract on them, 7,915. Last month was 8,684. Last quarter, 13,117. 2 years ago, 16,239. So continued decline and trend downward of available homes for sale. Sales per month, 9,634. Last month, 10,131. Last quarter, 6,582. Last year, 8,866. 2 years ago, 8,544. So there are less sales, or there were less sales last month than there were the previous month. Historically, sales do drop a little bit as we go deeper in the summer. Whether that's the reasoning for this trend or not, I don't know. It's too early to tell. But historically, this time of year, there are less sales. And there's less homes to sell anyway. So we'll monitor. So had a little bit of a technical glitch there. So 1.3 month supply of inventory continues downward. 2 years ago is at 2.3. Average price for monthly sales, $397,189. 2 years ago, $318,307. Median price is $320. And 2 years ago, $262. So about a $50,000 or so difference from now until 2 years ago. And then the Cronford Market Index is at 337. 2 years ago, 162. That's the statistic that puts kind of everything together to gauge it. 100 is a balanced market. Below it is buyers. Above it is sellers. Higher we go, stronger sellers market we have. And then in May, it was 146. So we've shot up since then. Super crazy, but that's what's happened. A lot of talk about mortgages and foreclosures and forbearance and what impact, if any, that will have on the market. So sharing from a company called Keeping Current Matters. Remember, only about a third of the mortgages in forbearance are past due, and of those, 90% have at least 10% equity. It's my opinion that obviously anyone in a situation that they're not able to pay, choose not to pay, horrible situation, don't wish that on anyone, is even if someone bought last year with a low down payment, in most cases, it's my opinion that they would have enough equity to be able to sell now, and let's just call it break even. So yes, they could choose to go into foreclosure, and that might cause a problem, but they would be able to sell. Unlike in 2007, 8, 9, and beyond, when there was an economic hardship and then prices were falling. That created most of the issues then as far as the market conditions. Despite the significantly high unemployment rates, the likelihood of a foreclosure wave is unlikely. In order to have a foreclosure wave, both an economic hardship and lower negative equity are necessary. That's direct from First American. And then some other interesting commentary. Matthew Gardner, Windermere chief economist, said, as we move through the most current COVID-19 impacted economy, the ownership rates of lower income households are significantly below that of households with higher incomes. And as the pandemic has had a disproportionate impact on lower wage jobs, the likelihood of any significant growth in foreclosure activity is likely to be muted. I'm in full agreement with Matthew across the board. I don't see, yes, there will be foreclosures, most likely, unfortunately, but I don't see the impact that it will have on the market be of significance. We're at such low inventory that our market, honestly, would probably welcome that inventory. Not because of the situation, but we need homes to sell, and they would go very quickly, in my opinion. Some other interesting numbers and statistics and commentary, basically, property searches from Realtor.com continue on an upward trend from people looking or living in urban locations, wanting to move to more suburban locations, have more space, not be around as many people. Goldman Sachs predicts the Fed will not raise rates until as late as 2025. So, what does all that mean? If you're looking to buy, in my opinion, still a great time to buy. Interest rates are super, super low, and affordability, despite higher prices, still makes payments lower than they were years ago when rates were higher and prices were doing whatever they were doing. Very good affordability, great time to buy from a pricing standpoint, monthly payment standpoint, and even if you're looking for an investment property, refinance, all of those options are great. Reach out to me, to a lender, to figure out what's best for you. If you're looking to sell, it's also a great time to sell. Days on market is short, lots of activity. You can definitely take advantage of the market conditions. So when you're ready for that decision or part of that process, reach out to me. I'm happy to help. Just have an honest discussion with your options, and if there's an opportunity to work with you, awesome. I would love that opportunity, but I'm just here as a resource, and whatever I can provide, I'm happy to do so. So feel free to call me at 480-233-6433, and always visit me on my website at blairballin.com. Thank you so much for watching, and have a wonderful day.